Hey everyone, Mo is here from Wall Street for Main Street. Today I'm going to do a video and do a technical analysis update, which is something I haven't done in a while. So today I want to talk about, I think is going to be, this market's going to be a hidden treasure for this year. It's just a market that most people overlooked due to what happened in Japan after the tsunami, and that uranium market. So after the Fukushima disaster 5 years ago, this market had been completely destroyed. If you look at the chart for the uranium ETF URA, you could see the downtrend it had been for the past 5 years. This is a 5-year chart. At one point, it was over $130 10 years ago, and now it's all the way in the bottom, and it went as low as $11.31. So this market has been in a bear market ever since the spill, and a lot of people, a lot of investors became pessimistic and got scared of the uranium market because of that. So we've just seen a big sell-off, and then you could see the downtrend here on this chart. But I think this market is on a rebound for this year. And if you look at the 5-year chart, you can notice the big spike in volume here. So that tells me that the big hand meaning the institutional investors, the people on Wall Street, are all buying a lot of shares of URA. So they think this market is due for a rebound, and I think I do too, and that's for a couple of reasons. There's a couple of catalysts for this market to come back to life, and one of them is, I don't know if you heard, but the country of Kazakhstan plans to cut their supply for 2017 by 10%. And that news caused a spike in the price of uranium, and I'll show you. Let me zoom into the 1-year chart, and I'll show you what I'm talking about. So they announced in January that they're going to cut production, and you could see the spike that happened in this ETF, and the volume just picked up a lot compared to the past year. So a lot of the big hand jumped into the market when they saw that. So I think that's going to be one of the catalysts for uranium. And also Trump has called to he wants to modernize the U.S. nuclear capabilities, whatever that means. I don't think we need any more nuclear weapons, but what do I know? So anyway, so that's also a catalyst for the uranium the uranium market. So I think 2017 will be a good year for uranium. So let's look at the ETF. Right now the ETF is in a nice uptrend. You can see it right here. Went up and then bounced back down and did not touch the 20-day moving average, just bounced off of that. So this would have been a good buying opportunity here. Then it went up and then went down and then bounced off the 20-day moving average, now went up, and it's in a pullback. So if you want to invest in your uranium market, right now is a good time, because I think it's going to bounce off the 20-day moving average and go up higher. So right now in the short term, the short-term trend for this market is up. If you zoom out and look at the 3-year chart, you could see we are in an uptrend. For the immediate trend, we're in our uptrend. If it can go past this 200-day moving average, then I think this market is, for the long term, in a bull market. So just got to keep my eye on that 200-day moving average. So that being said, what stock can you invest in to take advantage of the uptrend in uranium? One of them is one of the most popular stocks in the space is Cameco. Now, Cameco produced 18% of the world production, and one of the most popular stocks in the industry. So if you want to invest in uranium, this mining company is the one to look at. They have mines all over the world. They're geographically diversified. It's one of the most safest play you could do. I mean, in general, I think uranium is still risky, but if you want something that out of all the stocks in the market, if you want something that the least riskiest, Cameco is the stock for you. As you can see here, it's having a very good year. Once the price of uranium went up, we started to see a nice uptrend here, and the volumes picked up. After it crossed the 50-day moving average, you could see the spike in the volume here, and then it went up, and then it went sideways, and then once it broke the $11 resistance, it spiked up, and it sort of went hyperbolic just a little bit, and then once it reached up to here, you could see it had a violent crash, and that was due to the announcement that they're going to lay off 700 people. So the investor did not like that, so you could see the red here, a big sell-off here, but it held its own on the 20-day moving average and went right back up. And then Cameco had another bad news where Japan decided to cancel the $1.3 billion contract that they had with Cameco, and again, you have a big sell-off there. You can see the volume, and then went all the way down to the 200-day moving average, and then bounced off, and then went straight back up. So right now it's consolidating in this uptrend. So if you think about buying Cameco, now it's a great time. You can see the pullback here. We'll see if it can hold the 20-day moving average. Now, if you want something more risky and cheaper, the stock that we like is Denison Mining. Now, Denison is a small cap stock. I like this stock as a spec play because they have a mine in Canada, Wheeler River, and that mine has, I think, the highest grade uranium. And with high grade, that means 9 out of 10 times that means production costs should be low, and that's how they were able to weather the storm when the uranium price went down. They were able to keep the cost under control, so they're fortunate enough to stay afloat, and you can see it rebounded nicely this year from 35 cents all the way up to above 80 cents. And right now it's consolidating, and the resistance is about 83 cents, so that's something to keep your eye on. But if you want to get into this stock, now is a good time. You could see the pullback here, and it looks like it hopefully it's going to bounce off this 20-day moving average and then move back up. So this stock is a great spec play if you want to take more risks for higher return. Again, it's in a pullback, so if you want to buy now, this is a good time. Alright, so that's all I have. Next week I'll do a video update and talk about the precious metal market and talk about a couple of shorting ideas that I have. So that should be coming out sometime in the next week or so. And be sure to subscribe with us on iTunes. We're also on on Google and on Stitcher Play as well. So check out our podcast there, and also subscribe with us on our website at www.wallstreetformainstreet.com. All right, that's all I have. Thank you, guys.